China is a country famous for receiving foreign direct investment, but lately, it's been a major source of outgoing FDI as well. To understand the implications of this for the world and for Germany, I spoke with Cora Jungbluth, an Asia expert for our Global Economic Dynamics team. So, China is a major destination for foreign direct investment in the world, and that influx of foreign capital is a big reason that the country's become sort of a factory of the world. But in recent years, China is also emerging as a major source of outgoing FDI. What's behind that, and what is China's position in FDI stocks and flows?
Well, we have seen in recent years that since China accessed the WTO in 2001, that China has emerged as a major investor, especially among emerging markets, but China has also been catching up with developed countries in terms of FDI flows in stocks, such as the US or Germany. And right now, China ranks third when it comes to global FDI flows and 10th when it comes to FDI stocks. But when we look at the size of the Chinese economy and compare it to the size of FDI outflows and outstocks, we see that China still has some catching up to do.
Mm-hmm. Now, would you say that there was a major transition point, or has it been a steady increase of outgoing FDI over time?
Well, Chinese companies have been investing abroad since the 1990s at least, but in 2000 the Chinese government proclaimed the so-called Going Global strategy, which could be seen as a turning point when it comes to outgoing FDI, because prior to this strategy, the Chinese government promoted inflowing FDI in order to help the Chinese economy develop. So one could say that from the introduction of the Going Global strategy, there is a major, turning point, and Chinese companies started to invest abroad more, which also was due to the fact that China's outgoing FDI regime was very restrictive before the strategy, and afterwards the government started to liberalize the bureaucratic process.
So now here we are some years after that transition point and after the Going Global strategy. Where is China investing, and what kind of sectors is it most active in?
China is still investing most in its neighborhood in Asia, especially in Hong Kong. This has to do with production ties, with production networks, and also with proximity, also cultural proximity. But developed countries in North America and Europe are getting more important for China's outward investment. And also, if we look at the official numbers, we get this large chunk of Chinese FDI going into Asia, especially Hong Kong. But we also know that part of this FDI, especially part of Chinese FDI going to Hong Kong, leave Hong Kong for other destinations. So probably China's investment in other parts of the world is even larger than official statistics indicate.
Now, you mentioned that China's particularly strong in outward going FDI in its neighborhood. Do you think there's a political element to China's FDI strategy?
There definitely is. It is closely linked with the Going Global strategy, which I mentioned before. But the Going Global strategy rather promotes FDI in the developed world, so in Europe and North America. This is due to the fact that China wants to upgrade its economic structure. It wants to move up in global value chains. Therefore, it needs access to advanced technology, which Chinese companies may find in the US or in Germany or the UK, and that is why the government is promoting investment in these parts of the world.
Now, we sit here today on a fall morning in Germany, and in fact, Germany has become a major destination for Chinese FDI. What do you think is behind that?
As I mentioned, the Chinese government is promoting FDI in developed countries such as Germany. Germany is a very important, actually the third most important destination for Chinese FDI in Europe. And there are several motives behind this, actually. Access to technology plays a very important role. Chinese companies want to leapfrog, so they buy technology instead of developing it themselves, so they can leapfrog in their development. Also, they seek access to the German market, but also to the European market, which has a large purchasing power, and they really want to set up their subsidiaries in Europe.
So you think perhaps China views Germany as an entry point for broader activity in Europe?
Yes, one could say that. Chinese companies actually regard Germany as door to Europe.
Well, let me ask you this. Do you view this then as something that you would expect to grow over the next coming years? Is this a relationship that will increase? Will we see that in the numbers?
Definitely. If we look at investment relations between China and Germany, we see an asymmetry. Chinese companies only hold about 0.3% of Germany's FDI stock. That is really little given the fact that China is an important economic partner of Germany. And also, if you look at the other direction, that is German companies investing in China, we see that until 2014, German companies had invested 60 billion euros in China, whereas China had only invested 1.6 billion euros in Germany. So there is a lot of potential for Chinese companies to invest in Germany.
Now, you mentioned potential, but this relationship is also not without controversy. We've seen that the German Federal Ministry for Economic Affairs and Energy has actually intervened in certain Chinese attempts of acquisitions for German high-tech companies. What's behind that?
Well, there's the assumption, or one could say the suspicion, that the Chinese state is backing this kind of acquisitions, which leads to unfair competitions between China and Germany, because we see a lack of reciprocity. So Chinese companies are free to buy German and European companies, but vice versa, this is not possible because China is still protecting strategically important industries from foreign acquisitions. There are some industries in which foreign investors cannot invest at all. In other industries, they need a joint venture partner and they have to lay open their technology. And this is a real issue in economic relations between China and Germany. And that is one of the reasons why our federal government has started to take a closer look at Chinese acquisitions in Germany. If you look at the business level, it might be a good choice for an individual company, a German company, to have a Chinese investor, because they may get better access to the Chinese markets and maybe jobs are created and sustained. But if you look at the macro level, at the economy as a whole, if Chinese companies buy up all the key technology, Germany as a technology location might face problems in the future.
Well, there you mentioned some of the major challenge. As a final question, whenever possible, we like to wrap up on an optimistic note. Keeping in mind some of those challenges you just discussed, where do you view the biggest opportunities for Germany and Europe regarding outgoing Chinese FDI?
Europe and Germany need investment, and there's huge potential for Chinese investment here in Europe and Germany. So we can profit from this opportunity. And I think the more Chinese companies invest here, the less asymmetric the investment relations will get. And Chinese companies will also learn how a market economy functions, and maybe they take back this kind of experience to their headquarters in China. And probably Chinese companies investing here and finding open markets and a level playing field might help Europe and Germany to persuade China to level the playing field for German and Europe companies in China.
Well, there you have it, the optimistic perspective directly from the expert and the author of the new study. Thank you so much for your time.
Thank you.